So we have another example here. We're going to use the 2016 marginal tax rates again to calculate the federal income tax owed by a married woman filing separately whose gross income adjustments, deductions, and credits are given as follows. We're first step going to find the adjusted gross income. Remember that the adjusted gross income, just going to abbreviate here so I don't have to write it all out, is going to be the gross income, which in this case is $75,000, and we're going to subtract any adjustments. In this case, she has $4,000 worth of adjustments, which I can probably do this in my head. It's just $71,000 for the adjusted gross income. Next, we're going to determine the taxable income. So for the taxable income, I'm going to take the adjusted gross income, which is $71,000 from above, and I'm going to subtract any exemptions and deductions. So I went ahead and copied the table in here because this woman is married but filing separately. We have the second column that we're working with right here. Okay? So those are the numbers that we're going to use when we're trying to find her taxable income and then also her income tax. So for the exemptions, she's got an exemption of $4,050. For the deductions, we have two choices. We have the standard deduction of $6,300, or we could add up her itemized. So her itemized deductions, up here we have $11,000 plus $4,200 plus $3,000, but the medical expenses. Do you remember me telling you about the medical expenses being a little bit trickier? We have to consider if $1,500 is exceeding 7.5% of the adjusted gross income. That's the rule. So if I take the adjusted gross income, which was $71,000, and I'm going to multiply it by 7.5%, which is 0.075. Let's find out how much the medical expenses has to be in order for us to be able to count it. So 71,000 times 0.075. So as long as her medical expenses exceed $5,325, then we can actually include it as a deduction. But because this doesn't exceed, we have to take the medical expenses out entirely. There's no way she's going to be able to get to include that. So for her itemized deductions, we're only allowed to include the $11,000, the $4,200, and the $3,000. Let's find out how much that adds up to be. So we got $11,000, $4,200, and $3,000. And so my itemized is $18,200. So between standard and itemized, it looks like this itemized is much better. So I'm going to use the $18,200 as the itemized deductions. When I add the itemized deductions and my exemptions, it gets $22,250, and I'm still subtracting that from 71,000. So 71,000 minus 22,250. And the taxable income will be $48,750. All right, now we actually have to find the tax. Okay, so I'm looking at the tax brackets. Because I have 48,000, it looks like I'll have some in the 10% tax bracket up to $9,275. I'll also have some in the 15% bracket. That goes up to $37,650, but because my 48's bigger, and that means I also have some in the 25% bracket. Okay, so when I find my tax, I have 0.10 times all of the taxable income up to $9,275. Plus, in my next bracket, I have all of the taxable income from $9,276 to $37,650. So I'm just going to take the $37,650 minus $9,275 plus 25%, so 0.25 times all of the taxable income in the next bracket. Now, the next bracket, this married woman's taxable income doesn't go all the way up to $75,000. It only stops at $48,750. But the only amount that's in the 25% tax bracket is up until the $37,650. Okay, so I have $9,275 from my yellow 10% bracket, and then I have this much from my 15% bracket, and then I have this much over here in pink from the 25% bracket. Now, after that, if there's any tax credits, which in this case there was a tax credit of $500, so I just get to subtract that $500 straight off the bottom at the end. So I'm going to actually try to calculate this. So let's make sure that I've calculated each of these groups correctly. So I'm just going to do the subtraction inside the parentheses first. So I have $37,650 subtract 9,275. That gets $28,375 plus in the 25% category, in the rose colored there, I have $48,750, which is my total taxable income, minus the $37,650, which is $11,100, minus the tax credit. So if I add up my highlighted values in yellow, blue, and pink, I should get my total taxable income. Each of these groups needs to add up to the taxable income, because I don't ever want to double tax myself in like the 10% category and also in the 15% category. So if I add all those up, I should get the taxable income, which is $48,750. So it looks like I did this perfectly. Now I actually have to evaluate it. So 0.10 times 9,275. And that turns out to be $927.50. Then we have 0.15 times 28,375, and that's 4,256 for the 15% category. 0.25 times 11,100, and that's going to get 2,775, and then we have minus 500, and when I add all of those up, 927.50 plus 4,256.25 plus 2,775 minus 500, that's going to get a total of $7,458.75, which is going to be the tax due for this married woman filing separately with the given information. And that's the best she's going to get, and that's how much she's going to owe on her taxes.